What's going on YouTube? If you are a first-time home buyer or you're looking to purchase your next property and you're looking to put minimal down or zero down, then watch this video because I'm going to give you 3 different lenders that are offering zero down programs when buying real estate. Now, if you are new to my channel, welcome. My name is Art Smith, and on this channel, I like to focus on educating borrowers and consumers on their financial options so that you could avoid predatory lending practices from institutions and individuals. So if you're looking for straight to the point, no BS, financial information, do me a favor and subscribe to the channel. And if you're enjoying content just like this, do me a favor and smash that like button at any time in this video. And if you have any recommendations on what you want me to talk about next that is personal finance or real estate finance related, do me a favor and share your recommendations in the comment section below. Now, traditionally, mortgages require anywhere from 3 to 20% down when purchasing your very first or next property. However, there are programs out there that will allow you to jump into home ownership with $0 down. So in this video, I'm going to take my time and introduce 3 different programs that will allow you to put $0 down so that you could become a homeowner and start to build generational wealth amongst your family and start to gain appreciation year after year in your home's value. So the first home loan program that we have on the list is going to be NACA mortgage program. If you like the idea of putting no money down, no closing costs, no mortgage insurance, and no consideration of your credit score, then this is going to be the home loan program for you. Now, the maximum loan amount on this program is going to be $1.5 million, and that's going to be for a high cost area and 4-unit property. Now, there are going to be other loan costs for 3-unit, 2-unit, and 1-unit properties. Go ahead and take a screenshot of this table right here that shows the difference in loan limits per each unit that you are looking to invest in. Now, like I already mentioned, there is no down payment and no minimum FICO score. So if you have a 675, a 620, or even a 570 FICO score, you could still apply for the NACA mortgage program. Maximum debt to income ratio is going to be anywhere from 43 to 45%, depending on what you qualify for. And that's going to be inclusive of your mortgage payment, plus your credit cards, student loans, auto loans, and personal loan payments that are going to be found on your credit profile. Now, as I already mentioned, you could purchase anywhere from 1 to 4-unit properties, and this could be a single family detached dwelling or a condo or a townhouse. Of course, if you're looking to purchase 2, 3, and 4 units, you're going to be looking more towards single family units. However, 1 to 4 unit single family residences are going to be allowed with the NACA mortgage program. Now, you do need to be a first-time home buyer in order to qualify for this program. So you or anyone else on this loan cannot have any real estate interests in any other properties. You do need to be a NACA member for the entirety that you have this loan program. However, that's going to be very inexpensive to maintain, especially since you're not putting down a down payment or paying any closing costs whatsoever. And the NACA mortgage program is nationwide, so no matter where you're looking to invest into real estate, you could use the NACA program. Now, some of the cons with this program is that you cannot move out of the property at any time whatsoever. Now, since the NACA mortgage program is catered towards low to middle or moderate income individuals and minorities, this program is solely for individuals who are looking to occupy a home as their primary residence. However, you must maintain occupancy within 1 unit as your primary residence if you want to continue to qualify for the NACA program. So unfortunately, you cannot use this program to purchase an investment property and then move out 6 months, 12 months, or even 24 months after you acquire that property. But you can refinance out of the NACA mortgage program at a later time if you want to rent out all of the units within this property. All links and additional information to the NACA program will be in the description box below. Now, the second program on the list is going to be the Homebuyers Choice Loan that is offered through Navy Federal Credit Union. Now, this program also offers 100% financing, so no down payment is required. However, they do have a max loan limit of $1 million. Unfortunately, Navy Federal doesn't give out FICO requirements for their home loan programs, but they do follow conventional home loan guidelines, so we could go ahead and assume that their minimum FICO requirements are going to be anywhere from 620 to 640. Maximum debt to income ratio is going to be 50%. And again, that's going to be inclusive of your mortgage payment plus your credit card payments, student loan, personal loan, and auto loan payments. Now, at the time of me shooting this video, Navy Federal is only allowing this loan program on 1 to 2 unit properties. And you must be a Navy Federal member in order to qualify for this program. However, you do not have to be in the military in order to qualify for this program, which is going to be a great bonus for individuals who are a member of Navy Federal. This loan program is going to be offered nationwide, so there are no geo restrictions for the Homebuyer Choice Program. Now, some of the other benefits for this program is that your mortgage is going to be fixed for 30 years, no mortgage insurance is going to be required, and they also offer something called the no refi rate drop, which allows you to refinance or reduce your interest rate on your home loan with Navy Federal if the rates drop in the near future for a very minimal fee in comparison to traditional refinance transactions. Now, some of the cons for the Navy Federal Choice Loan Program is that there is going to be a funding fee of 1.75% of the overall loan amount, plus a 1% origination fee that will be charged at closing when you acquire your first or next property. All information about the Navy Federal Homebuyers Choice Loan will be in the description box below, so check them out. Now, number 3 on the list is going to be CalHFA Dream for All Loan Program, and this is going to be for California residents only. Now, this program offers up to 20% in financial assistance, and that could be used for your down payments and or your closing costs. However, that financial assistance cannot exceed $150,000. And you must register for this program and voucher, and it is going to be a lottery pick, so it's not going to be first come, first served basis. Now, in order to qualify for this home loan program, one borrower must be a first-generation homebuyer, and a first-generation homebuyer is defined as a homebuyer who has not held any interest in any real estate property or who has not had a mortgage to their name in the past 7 years. So again, the minimum down is going to be 0%. The max loan limit for most counties is going to be $766,550, and for high-cost areas like LA, San Francisco, and San Diego, the max loan limit is going to be $1,149,825. Minimum FICO score is going to be 640. Maximum debt to income ratio is going to be 50% on the back end, and only 1-unit properties are allowed for the CalHFA program. So no duplexes, triplexes, or 4-unit properties. Now, some of the cons for the CalHFA program is that there are going to be income limits. So there is going to be a cap to how much you and your spouse could earn in order to qualify for this program. So that's going to be a disqualifying factor for individuals who are making north of $200,000 to $250,000 per year. Another con with this program is that you are going to have to share in equity and appreciation with the state. So here's an example. Let's say that you found a house that cost $500,000. Your first mortgage loan is going to be $400,000, and the CalHFA Dream for All program is going to give you $100,000 to total that $500,000 purchase price. So let's just say and assume that 5 years later, the $500,000 house that you purchased now is worth $640,000. So of that $640,000, the appreciation amount is going to be $140,000. $640,000 minus $500,000 is going to be $140,000. So your portion is going to be 80% of that $140,000, which is going to be $112,000. And then the other 20% is going to go towards the state, which is going to be $28,000. So if you were to sell that property for $640,000, and these are just going to be rough estimates, $340,000 would go towards paying off of your mortgage, $128,000 would go back towards paying the down payment assistance program plus the equity share, and you would keep $142,000 in the form of your equity, and that's going to break down to $112,000, which is going to be your appreciation, plus $30,000, which is going to be your projected principal pay down off of your mortgage. So if you were to sell, you would receive an estimated $142,000. However, we are not accounting for any realtor fees, any closing costs, and any transfer taxes that are to be incurred when you are to sell this property. For more information about the CalHFA program, I will link all information in the description box below. So if you're looking to purchase your very first or next property with no money down, check out all 3 of these programs and let me know in the comment section which one is going to be best for you and your situation. Now, if you have any questions about any one of these 3 programs, definitely drop your questions in the comment section below. And if I left anything out about any of these 3 programs, definitely add your 2 cents in the comment section below as well too. All right, guys, thanks so much for watching this video. If you haven't done so already, do me a favor and subscribe to the channel and hit that thumbs up if you learned a thing or 2 in this video. Other than that, you are truly appreciated, and I will see you on the next video. Peace.